Did you know that 70% of people over 65 will need some form of long term care, but most have no plan to pay for it? Or that the biggest risk to your retirement may not be your bank account, it could be your mindset. You might think you're ready for retirement, but can you honestly say you're a retirement genius? I can't. Would you like to be? I would. I'll bet you would too. Well, welcome to Always Ageless with Valerie Van De Zilver. And today we're talking to the man who's made it his life's work to help people retire smarter, healthier, and happier. Chris Orestis is also known as the retirement genius. He's the person when you walk into a room and see him, you immediately know, I'm going to like that guy. That's someone I want to get to know. That's certainly how I reacted. Most impressively, however, Retirement Genius is the number one most quoted resource in the insurance and retirement industry. And that is pretty impressive. He's got a personality quiz for you that might just surprise you, insights about long-term care and lifestyle planning that you haven't heard anywhere else, and stories that will make you rethink what retirement really should be like. Chris is also, in addition to being the president of Retirement Genius, is a nationally recognized speaker and very well liked, I might add, in retirement, finance, long-term care, and a pioneer in LTC life settlements. Don't know what that is? Hold on, because today we're going to talk about it. You'll leave knowing what a life settlement is all about. He's a popular author, a media expert, and a podcast personality. He's a former political operative, a DC lobbyist, and senior issues advocate with over 25 years of industry experience. And I'm especially interested to talk to him about his work on Capitol Hill. Can he even make a difference? And I'm anxious to hear about that. So whether you're planning for yourself or you're helping your parents navigate this next chapter, this is an episode that you'll want to share, re-listen to, and talk about. And after you've listened to this, you're going to go home and say, hey, you guys should hear this guy. This is who you want to listen to. So pour your coffee, lean in, and let's turn confusion into confidence, because retirement should not be something that you look forward to, or you should look forward to it and not lose sleep over. That's for sure. So let's dive in. Welcome, Chris, to Always Ageless with Valerie Van De Zilver. I have to tell you, I'm especially honored to have you with me today. When I first met you at the CSA, the Certified Senior Advisor Conference, I was so impressed, and I could tell with your bow tie, you mostly wear a bow tie, which sets you aside in a room. I said, oh gosh, I wonder if someday he would be on my radio show. And now we're in our second year, and I'm so honored that you have agreed to be with us today. Thank you very much.
Oh, the honor is all mine, Valerie. Thank you so much. And the introduction was wonderful for you to share, and I appreciate everything you said, and to be here to talk to you, talk to your audience about these really important issues. You know, what seniors and families are facing when it comes to retirement, and the unique financial challenges that are driven by aging and declining health, the eventuality of declining health, which so many people ignore until one day it's a crisis situation in the middle of their lives and they have to scramble to figure out what to do next. The more we can talk about it, the more we can plan, the more we can understand how to be ready to take on every stage of retirement, the better it's going to be for everybody.
Absolutely. And Chris, I think one of the saddest things is when someone finds themselves in a situation they weren't prepared for, be it that a spouse has passed away and leaves a wife and she never paid the bills, doesn't even know what the passwords are to the bank accounts, needs to make a house payment, doesn't know how to do it, knows they must have the money, doesn't know what to do, or they think they have to sell their house and they really don't, but they didn't even know that staying there was an option. Those are the situations that I'm sure must break your heart, just like they do mine.
They do, they do. It's the lack of planning, the lack of communication, the oftentimes lying to yourself that it's not going to happen to you, when the reality is the vast majority of people will need some form of long-term care. Some, they're going to confront healthcare crises, and or just ongoing treatments and conditions. The anybody who's 65 today, a couple that are 65 today in their remaining lifetime are looking at maybe spending as much as $300,000 out of pocket on health and long-term care costs from this point going forward.
And that is a lot of money that most people don't have. So, the one thing I want to be sure today that we talk about, Chris, is how does all of this relate to the everyday person? We don't want our listeners and our viewers to think that this is a show only for people who have money, right?
Oh,
This is for
absolutely.
everybody. Because whether you have a lot of money or you have a little money, number one, doesn't mean you couldn't plan. And number two, that there aren't options for you. Is that correct?
That's absolutely correct. Retirement isn't just for the rich. Okay, retirement should be for everyone. And what retirement means today is very different than what it meant decades ago, 20, 30, 40 years ago. I like to say this isn't my grandfather's retirement that I'm looking at. You
Yeah.
know, we I think today as people retire, they're more active and more aware of the importance of being active, to have purpose in their lives. And you know, sometimes you'll see pundits out there that'll say, if you don't have 2 million, 3 million, $5 million in the bank, you can't retire. Well, that's not true. That's quite frankly, I find that to be offensive and tantamount to fear mongering to scare people possibly into, you know, jumping on to signing up for some kind of scheme or some kind of program that's going to cost them money. No, no, no. There is an opportunity for everybody to retire. Now, the sooner you start, the better, but it's also never too late to start. If you're in your 20s and you start your first job, I always encourage kids, make sure you're taking advantage of that 401k. If there's a 401k there, max
Sure.
that out. I have four sons, and as each of them get out of college and have started jobs, that was the first thing we went through. I sat down with them to help them check off their benefit forms, make sure they were going to max out that 401k, get the company match, and I've told them, if you start this in your 20s, you're going to be a millionaire in your 40s or 50s. Now,
Yeah.
if you start in your 30s or 40s, you still have a chance to accumulate a good amount of money into your retirement savings. And so it's never too late to start financially. Another smart financial investment that people should be making as they, at every stage of life, no matter how old you are, is in their health, in their physical health, because the longer you can hold back things like the need for care, the expensive cost of eventually long-term care, the more you're going to get out of your retirement, the more you're going to stretch your retirement dollars. So it's never too late to start, but certainly the earlier somebody starts, the better. And if you're listening today and you feel like there's more you can do, I say get started today.
Absolutely. I think one of the things that, and I relate to this because of my age, that when we were younger, our parents were 60 or 70, we thought they were old, right?
I
Really old.
know, I
But
know.
no, and we did. And not only that, but in many cases, they were dying at that age. But now for us who are that age, we don't think we're old.
Nope.
And and so I think that the mindset shift is huge. And that of course is part of the problem. But let's talk about you. Let's take a few minutes and talk about, tell us about why the name Retirement Genius. How did you get the name? And how did this stick? Who gave it to you? Did you come up with it on your own?
Well, you know, it's interesting. I have been out there in the financial and long-term care world going back a good 25 years. Started even earlier than that. When I first got out of college, I worked in Washington, D.C., and we'll talk a little bit about the politics. But when I first got out of school and I was young, I worked in the White House. I worked on Capitol Hill for the Senate Majority Leader, and then I was a lobbyist for the insurance industry for a number of years. And it brought me into working on issues around senior care, long-term care insurance, long-term care services. How are we going to fund the aging baby boomers, which back then we were looking at as years down the road? Well,
I,
they're
here we are.
aging. They're here today. We're here now.
Here
Now
we are.
Gen X is aging. Now Gen X is crossing over into their 60s. So about 25 years ago, so I left Washington, D.C. in the early 2000s, and we started a company dedicated to trying to help people access private pay solutions to pay for long-term care services. And we ended up teaming up with some of the big home care and assisted living companies across the United States, bringing financial solutions to help people navigate that complex problem that they kept running into. How do we pay for the care that we want, that we need? Because it's not as, for so many people, they think, well, someday if I ever do need the care, it's covered. I have insurance, Social
Oh, yeah.
Security, Medicare, something's
Yep.
going to pay for it. Or if nobody pays for it, my kids will never let me go into a nursing home. Well, it tends to not work that way, and you need those solutions. So we were working with big companies like Brookdale Senior Living and a place for mom, Home Instead, which quite frankly, to this day, we still work with many of those companies. 22 decades later of trying to help families access private pay solutions, which the biggest hurdle for them was just the lack of knowledge, the lack of knowing that they had options that they could potentially access by just the simple matter of, did you have a few things that you hadn't thought of, like, do you have a life insurance policy? And that's where we came up with the long-term care life settlement by cashing out people's life insurance policies. Do you have a home? Maybe you should be looking at a reverse mortgage or a home equity credit loan. Maybe you're a veteran. Have you thought about tapping into the VA aid and attendance benefit? Things like that. Annuities that have features to help people pay for long-term care. And as that kept going and growing, we the company just kept coming along the years until about 5 years ago, we underwent a rebranding, and people were seeing me talk and in the media. I mean, we looked at kind of a media. How many times had I been mentioned in the media going back since we started the company 20 years ago? It was over 1,000 times I've been quoted in the press talking about these issues. I've been on TV, I've been on radio, I've spoken at more conferences and meetings that I could even remember to count. And eventually people were referring to me as the genius. Oh, the genius is going to be here, the genius on long-term care. And it turned into retirement genius. And then it was suggested by a good friend who was kind of helping us get this go. He said, I've seen pictures of you when you wear a bow tie and the word genius. You put those together and that really works. And so the next thing you knew, I was
And it
wearing
does.
my bow ties all the time, and we
Yep.
created the brand and everything around it. And it really stuck. When people hear the name Retirement Genius, or they see the logo, or I get stopped in airports with people saying, "Hey, where's your bow tie, Retirement Genius?" It's
Yes.
amazing how that can happen.
Yeah, absolutely. Well, certainly that's what I think of. Of course, I know you now, but certainly I remember walking in the room at CSA, and there he is. There's the guy. Sets you
Yep.
aside from everybody else. Certainly has been your brand. So, what surprised you the most about working with aging adults and retirees over 25 years ago? At that point in time.
Yeah, it was the lack of understanding and the lack of communication within the families themselves. The lack of understanding what are the options, how to know when it's time for them, how to pay for them, and having some communication among the families so that when that time comes, you're able to do something about it. It isn't sudden, it isn't disruptive. It's been planned and thought out. So and the wishes of your loved one have been well taken into account, so that that transition into whatever form of senior care may be happening, whether it's home based care, you're moving into an assisted living community, you're ready for it, instead of an incident happening and you're in the hospital looking at discharge paperwork and you've got 24 hours to figure out the entire world of long-term care, something you've never thought about and didn't think was going to happen to you.
Yeah. Well, that's what happened to us, and certainly that's catapulted me into this. That the hospital calls, you get the call, right? And the
Right,
call is, we're discharging your dad. I said, well, where am I going to put him? Well, we don't know, but that's not our problem. We're
right,
discharging him.
right.
And
And
I
then
thought,
you've got to figure it out.
yeah, there must be other people like me. And certainly we've discovered that there were, and that's our mission, is to help everybody, not only the families, but the children.
It's amazing too how many people you encounter that are professionals in the senior care world, who came into this because of their own personal family experience. Something happened, and they said, "I got to do something about this. I've got to get involved." And they brings them into becoming a caregiver, an advisor of some sort.
Absolutely. We all have our stories. You know, you and I are in groups where we network with other people around the country in a variety of fields, all related to working with seniors and their families. And almost always everyone starts with a story, right? My mom or my dad or my grandpa, or I was working with a company where that was my job. And I thought other people needed my help. And certainly, that certainly has become the passion for so many of us.
If you're in a room with 100 people and you ask, raise your hand if you thought long term care was never going to impact you, 80 or 90 hands are going up in the air. And then you ask, how many of it has it impacted you? 80 or 90 hands are going up in the air.
Absolutely. We were with a group a couple weeks ago, and we went around the room, and it was all people. We weren't relatives. We all didn't work together, but something brought us together. And we went around the room, and how many people were caregivers? Almost everybody was a caregiver for somebody, right? And it's amazing how that all has changed and how none of us were prepared for it. We didn't know what we should do. So you talk about, Chris, about retirement as a triangle, which most people don't. Never heard this before, about finances, health, and lifestyle, which I find really
Mm-hmm.
fascinating.
Mm-hmm.
Why do most people ignore at least one of these?
Yeah, people tend to focus first when you think of retirement, you're thinking about money. How do I make money? How do I save
Yeah,
money? How do I have
abs-
enough money?
yes, we do.
And for some people, they will get to a point where they realize maybe I'm not going to have enough money. Maybe I'm not going to retire like a multimillionaire and have a yacht and whatnot. And they think financially they don't have what it's going to take to retire. Or the flip side is they've worked themselves to death and they've accumulated a ton of money, but they've sacrificed their health. They've sacrificed their relationships along the way. When you land at retirement, having the balance of your financial, your health and long term care planning, and your lifestyle is so important because what fun is it to be a millionaire if you don't have anybody to share it with? You don't have purpose in your retirement, in your life. And what good is a Ferrari sitting in your garage if you're too sick to drive it? So
Well,
it's bringing those three things together that I've always said is what it takes to retire like a genius.
excellent. So let's say that someone is only focused on money and they kind of forget the rest. So, what's the cost of missing that full picture?
Well, retirement without relationships intact, without purpose other than money for the sake of money. The old saying, how many boats can you water ski behind? How many cars can you drive? You want to be financially stable and as well off as possible, but if you've sacrificed your relationships along the way and you're going to get there by yourself, it's going to be very unfulfilling. And if you're going to get there and your health isn't in order, well, bad health, declining health, chronic conditions is going to eat away at not only your money but your lifestyle, tremendously undermining the quality of your retirement. So it's really, you've got to bring those elements together. So it's having a solid financial plan matched with taking care of yourself and being ready for the future of possible costs of things like long-term care, and having relationships, having purpose, having plans. You can't get to a destination without a roadmap. Retirement's a
No.
destination, and you really want a roadmap as to where you're going so you know you've gotten there when you arrive. And for many people, a real challenge to retirement is arriving without either recognizing they're there or what to do once they've gotten there. It's the planning to have all those pieces in place to truly enjoy a retirement for yourself and with your loved ones that makes for a fulfilling, well balanced retirement.
And I think also planning, Chris, also is not just It's kind of like getting the call and being, some people are forced into retirement or they're forced into these situations where, and especially now with all the things we see with technology, the changes in the world, in manufacturing and in the government and all of these things where people are going to be forced into making a change, and they need to plan for it for that reason as well, not just because I'm going to retire, but what if you're forced into a retirement situation?
Right.
So again, planning is what we should be doing way far ahead of that time.
Yeah. 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 I think people, there's a real feeling of uncertainty right now around retirement. I think more than ever, people are concerned about the future of the social safety nets like Medicare, Social Security, Medicaid. They're concerned about the economy. Is it up? Is it down? I think right now there's a lot of confusion as to which one it is. Um, and so there's people we've been watching, particularly this year, the biggest jump of people at the age of 62 claiming Social Security in any year that we've ever seen.
Is
Whereas
that
we
right?
know if you wait longer, up to the age of 70, you're going to collect more. Once you start collecting Social Security, you lock in that benefit amount for the rest of your life. If you what you would get at 62 versus what you would get at 70 is almost twice as much at the age of 70. Making sure that you're selecting your Medicare benefits correctly and understanding that on an annual basis you can re-enroll into something as your life, as your health needs change. Understanding that Medicaid is a program really to support people that are impoverished, and once you're on Medicaid, you're now a ward of the state, and if that's your plan to pay for long-term care, be careful what you wish for, because now you're on Medicaid and you're probably going into a nursing home to share a room with one or two other people. You're not going to stay at home most likely, and you're not going to get into an assisted living community and live that pretty fun lifestyle in assisted living. I've seen some assisted living communities, Valerie, that are like Ritz Carltons, but
Yeah.
that's not Medicaid. That's private pay, and that takes planning. That takes the kinds of things that we've worked on for over 2 decades.
Absolutely. So I've heard you say, I think that retirement is much about identity as it is about income.
Yes, I firmly believe in that. It's retirement has really changed from stopping working to stopping doing what you have to do to start doing what you want to do.
Ooh,
The
that's good.
Yeah, the real transition into a great retirement, which gives you purpose, which potentially continues to bring in some income. Hey, listen, just because you retire doesn't mean you have to stop bringing in income, doesn't mean you have to stop contributing to society, doing great things. And
Yeah.
so, but you want to be in a position where you're calling the shots and you're able to do what you want to do instead of what you have to do.
Chris, you created a retirement personality profile quiz. Is that correct? Tell
That's
us
right.
about that. How does it work and what kind of personalities do you see?
We see a wide range of people. It's a series of 10 questions where you're gauging your own opinion of your readiness based on the factors we've been talking about: your financial readiness, your health, long-term care readiness, your lifestyle readiness, to sort of put you on a scale of 1 to 10 where you are in terms of your personality and your readiness to be retired. It's a helpful little tool to help people take a test to see where you end up ranking yourself.
And do you see surprises with that? Do you think people are honest when they're filling that out?
Well, we
Pretty much.
certainly hope they're being honest, because the only people they're lying to are themselves.
Sure.
Uh, but for the most part, people are honest about it, and I think they're surprised when they see that one of the elements of retirement is so off scale compared to the other. To get to that balanced triangle, those three balanced legs of the stool, they find one leg is way too short, or one leg is way too long, and they're out of balance. And it's an opportunity to try and recalibrate and get back into balance.
And I'm assuming that that is available to our viewers and our listeners. Do you have that online where they can go find it?
Yes, yes, yes. It's on a website called chrisorestisrg.com. chrisorestisrg.com. Not to be confused with the Retirement Genius website, retirementgenius.com. I have a couple of websites, and the readiness quiz is over on chrisorestisrg.com.
what can they do with that information? Do you have other, like, do you say if you are this, you should look at this?
Yeah,
And
when you see that somebody's out of balance, here are tools and resources you can reach to help get yourself back into balance. Are you financially underprepared? Well, if you've hit your 50s, you could, and you're still working, you could start to take, you could start to increase your catch-up contributions to your 401k. And once you're between the ages of 60 and 63, you can supersize your contributions to your 401k. That's one way to try and get back into balance with financially, as an example. If your relationships are out of whack, if you have no real purpose and
uh,
plan for retirement, well, here's an opportunity to look at some of the resources, read some of the articles and videos that we provide. We have a whole host of animated retirement genius videos. You'll see an animated character of me in the bow tie, uh,
in the boat.
giving you all kinds of different advice on our YouTube channel. There's a Retirement Genius YouTube channel that has a
Yes.
lot of great short animated explainer videos covering a range of topics about retirement that help people get themselves in balance.
Right. So this is a guy you want to watch and listen to and watch as well on his YouTube channel. You mentioned Medicare. So a lot of people assume that Medicare covers everything, and tell us whether that's true or it's not true, which we know it isn't, and how should they plan for that?
Yeah, Medicare does not cover everything, quote unquote. And one of the big everythings that it doesn't cover is long term care. Medicare does not pay for long term care. It will pay for a defined short term rehabilitation care upon discharge from a hospital into a skilled nursing facility up to 100 days with only partial coverage for the majority of that. There is premiums to be paid when you go onto Medicare, out of pocket costs that you have to factor, like co-pays, deductibles. And there's a difference between traditional Medicare and Medicare Advantage plans, which people
Yes.
are seeing Medicare Advantage plans, TV commercials all the time on television. And those are private insurance plans that you sign up for, a lot like the insurance you were used to when you were working, where you're paying premiums, you're getting a host of other benefits beyond just what Medicare provides. For example, dental care, vision care, hearing care is not covered by traditional Medicare, but you can get that on Medicare Advantage plans. What's important to remember about Medicare is the enrollment windows. When you first turn 65, you have a window to enroll. You have an annual enrollment period that everybody gets to take advantage of, where they can re-enroll, re-up, change their what they've enrolled in if their needs have changed. Let's say you started on a Medicare Advantage plan, but then you decide you want to go to traditional Medicare. Once a year, you have the opportunity to do that. A lot of people blow that off and they just enroll in Medicare once and ride it on autopilot, and it's costing them money. They're missing benefits. They're not doing it right.
And I think, Chris, that Medicare is one of the most misunderstood tools there is, and I think that it's just not well presented. The education, I think, is, I don't want to say is poor, but maybe is lacking. I just
It's
don't think
confusing. It's
it's
confusing,
confusing.
Valerie. That's what it is. There's a lot of advertising out there to get people to enroll in Medicare Advantage plans, but there's a whole lot of different plan options. There's Medicare Part A, there's Medicare Part B, there's Medicare Part D for drug coverage. Part C is the Medicare Advantage plans. It is an alphabet soup of confusion for people that I always recommend speaking to an advisor. There are a host of Medicare agents out there, licensed insurance agents, that will help people navigate and understand what would be the best Medicare options for them available in their states. Not every plan is available in every state on the Medicare Advantage side. And so, as I always say with any kind of financial decisions, Medicare, insurance, annuities, investments, don't wing it. Don't try and do it on your own. Don't take it for granted. Don't be on autopilot. Take advantage of the professionals and get the advice. You can go to groups like Retirement Genius to get great information and access to resources. And you have all kinds of local agents and groups out there that will help you navigate and get into the best solution to meet your needs.
And isn't it important for people to realize, because I know we didn't for a long time, that Medicare actually you can change your plan and you really should reevaluate it every year. Do you feel that
Every
way?
year, absolutely. That annual enrollment period, Valerie, you've got to take advantage of it. Anybody that ignores the annual enrollment period, which goes from October 15th to December 7th every year, October 15th to December 7th, if you're ignoring that, you're probably costing yourself money. You're probably losing out on benefits that are correct for you and your situation. And remember, when you enroll, it's only for one. So if you're a couple, you're enrolling and your spouse is enrolling. You don't enroll together in a group plan. You're individual coverage. So you each have to look at it and look at each other, your lives, and figure what might be the right plan for one may not be the right plan for the other.
So I have a question for you, Chris, because I know our viewers and our listeners must be saying, yeah, I know I should do that, but I don't understand what I've got anyway, so it wouldn't make any difference if I evaluated it. So just tell us briefly, because there's so many other things I want to talk to you about, but just tell us briefly. So what kind of mistakes could someone make, or money you could leave on the table, or problems you really could cause yourself by not reevaluating your plan every year?
Well, a big one could be uh, based on your travel habits. And are you in network or out of network? If you're in a Medicare Advantage plan and you're a snowbird, let's say you enroll in a Medicare Advantage plan in New York, but
Okay.
you spend half the year in Florida, you're out of network. If you're in a Medicare Advantage plan, now traditional Medicare coverage covers you everywhere you go. Okay, but there's a trade-off in benefits. So a traditional Medicare plan, if you're in New York, if you're in Florida, any Medicare provider accepts the coverage. If you're in Medicare Advantage plans, you got to make sure that who you're going to is in network. Do you need to get referrals to get to that coverage? It's managing it like your regular insurance you may have had through an employer. So it's understanding those and not making those mistakes that is the difference between costing you money, coverage, the potential of even accessing care if you're in a network in an area that doesn't have the coverage that you can be approved for. You want to make sure you understand. And then if you're traveling or living abroad, Medicare is not paying for coverage in Portugal or Spain. So you're going to have to be ready for that.
Yeah. Yeah, it's fascinating. You're right. That's something most people might not even think about. And hopefully their advisor tells them. But if they don't have an advisor,
Right.
then they're just on their own. They're just guessing. And maybe they had a plan, and then this year they travel and they didn't realize it was that they should have reevaluated. That is really, really, really good information for people to know. But I think
Yes.
they just don't realize this.
No, they don't.
So
So people take it all for granted. People are, take it for granted. People will put more thought into buying a large screen TV than they will enrolling in their Medicare plan. And they've got to put the time and thought and work into it. Same thing with enrolling in Social Security. Same thing if you're making the move to get onto Medicaid and you're going to do a spend down to cover long-term care. And guess what? Those are the publicly funded entitlement programs. Then there's the whole side of private funding, private pay for long-term care, private funding, investments. And that's the other area that we spend a lot of time focused and working on with the people that we help.
now I know you also have talked about annuities, and you're saying that they can both be a genius move and a trap. What's the difference?
Well, the genius move for an annuity is the fact that money put into it, you're setting yourself up for growth, but you're not putting yourself in a position where the market fluctuations could wipe out your money. When you put your money into an annuity, you're setting yourself up for a guaranteed income stream for the rest of your life. Now, the trap, although that's a harsh word, it's not really a trap, but the trade-off is that when you're putting your money into an annuity, the you're basically saying to the insurance company, I'm going to give you this money, and in return, you're going to pay me an income for the rest of my life, with the idea from the insurance company that they know they're keeping that money until you die. But the up or down on that is, how long are you going to live? Let's say you put $100,000 into an annuity and it's paying you a $2,500 a month benefit for the rest of your life. The insurance company is taking the risk as to whether you will live longer than the $100,000 or not. And the trade-off is, maybe you passed away before you collected back all the 100,000, but annuities do have options to set up beneficiaries. Uh, Annuities also have options with long-term care riders that can actually increase the value of the money in the annuity to be paid towards long-term care benefits specifically. So annuities can be one way to help you pay for long-term care, just like life insurance policies can be another way to help you pay for long-term care, with what we did when we brought the LTC life settlement, the long-term care life settlement, into the market 2 decades ago.
Is it ever too late to start planning for a smarter retirement? And if so, what about the people who've already retired and it may seem like too late?
No, it's, the sooner you start, the better, but it's never too late. It's never too late to make moves like a smart budget, to put yourself in a position where, let's say you're retired and now you're living on a fixed income. Well, let's make sure you know how you're spending your money. Be smart about how you're spending your money with a budget. Um, Also, look at trying to avoid getting into debt when you're retired. Pay off. Go into your retirement with as much of your debt paid off as possible, and avoid getting new debt or growing debt while you're in retirement. Keep an eye on your assets, things like your home, your life insurance, if you have money in annuities. Those are all assets. Those are all resources that you can access to either pay out an income on a monthly basis like an annuity does, or let's say you have a life insurance policy that you no longer need or want. You could cash that out and liquidate it through a life settlement to get a lump sum of money to help add more to what you have in retirement. Your home is a potential resource to tap into your equity through something like, say, a reverse mortgage. If you're a veteran, there's veterans benefits you want to make sure that you're accessing if you're eligible for them. And those things are all things that are what you would do really once you're at kind of the age of 65 and above. Doing something like a life settlement isn't for somebody in their 40s or 50s. It's for somebody in their mid 60s. Doing a reverse mortgage, you've got to be 62 and above to qualify for that. Veterans aid and attendance benefits for long-term care, that's 65 and above. So there's a bunch of options that once you're at that, you're in your 60s, you're only now able to access. And some of them, like let's say a life settlement, will actually pay out the policy owner more money value for their policy the older they're getting, and the more impaired their health's becoming, the more they need long-term care, the more they're going to actually get paid out for their life insurance policy through an LTC life settlement or life settlement.
Something that occurs to me, Chris, is that we plan for a wedding, we have our children, and pretty much we go through life, right? We plan for our kids to go to college, and we may have a life insurance policy, but we just go through life. We haven't, many of us have a really nice life, and we all of a sudden we've really never had to hire an attorney. Yeah, we buy insurance, but all of a sudden we get to a stage like some of us may be now, or should have done it before now. All of a sudden it seems like we need advisors. Is that a fair statement? Right? We need to look at Medicare. We need to look at financial planning, whether we have a lot of money or not. We need to look at, at our Medicare, at our life insurance, at all these options, at long-term care. And I think that a lot of us at this stage of our life just didn't think about it because we weren't raised that way, because our parents didn't. Don't you think maybe that's true?
Oh, absolutely. Listen, people should not go into their retirement or live their retirement and their planning is a series of throwing darts at the wall. You need a well organized plan across those three key components: your financial, your health, your long term care, your lifestyle. tapping into advisors, doing, reading, and there's so many resources out there now that people can access to educate themselves. But still, I would make sure I am going to advisors, particularly if you're going to get into a Medicaid spend down, estate planning, you want to work with an attorney. If you're looking at insurance, annuities, you want to work with a licensed insurance advisor. If you're going to start to figure out what are you going to do about home care, assisted living, you may want to be talking to a geriatric care manager who can help you navigate, explain, and understand
Right.
what are the different types of care, how to access them. Now, there's a lot of resources online, organizations like Retirement Genius. People can watch videos on YouTube that are very informative. But really, that to me is a base level of education and understanding to
Yeah.
set you up to better be able to work with a professional, an advisor, to do it right. Don't skimp on spending $1,000 or $2 to set yourself up right. Try and figure it out on your own. Make mistakes and cost yourself so much more money than that by getting it wrong.
It's almost just not even an option anymore.
It really isn't. It's very confusing. Again, a lot of great information and resources out there. You can
Available.
educate yourself, but then you've got to work with the right professionals to get it done right.
Absolutely. Now, Chris, there's something that obviously you're known well for, and that so many of us, and I guarantee you that most of our listeners and viewers have no idea. So, talk to us about these long term care settlements, these life settlements, how it works with insurance. What is it? Just start from there. We don't know.
Absolutely. So think of it this way. Life insurance policies are assets. They're actually legally recognized as the personal property of the policy owner. So today, the two biggest assets that people own in this country is their home and their life insurance policies. There's about 260 million life insurance policies that are out there with more death benefit than there is home equity in people's homes in this country.
Really,
And
really.
everybody who owns a life insurance policy, they own that. That's their property. And just like your home, where you make mortgage payments for years, one day when you're done living in the home, what do? Do you drop your keys in the driveway and abandon your home? Well, of course not. You sell your home to get its full market value. Well, it's the same thing with life insurance policies. People make premium payments for years, and then
Right.
one day when they're done with that policy, they don't need it anymore because the kids have grown up and moved on. They have their own policies. And you're sitting there, you're in your 60s, your 70s, your 80s, you still have a life insurance policy, and you think to yourself, why are we still paying premiums on this policy? We don't really have a need for it anymore. Let's just dump it. Let's get rid of it. Well, you don't need to do that. You might qualify for a life settlement where you could sell the policy. And there are big institutional investors, big investment banks and groups that are buying people's unneeded life insurance policies by billions of dollars a year in this country, giving people back money that they've paid into these policies in premium payments and even more sometimes, that they can then turn around and take that money and do with it as they please. And for many people, to qualify for a life settlement, you're going to be older and your health is probably starting to get worse. And you're, for a lot of people, they're going to take those funds from the life settlement and turn around and use it to help them pay for their health and long-term care needs. And this has become something that care providers across the country have worked with us on for over 2 decades now, on helping families do that, to access money so they can pay for home care, they can pay for assisted living. And over the years, we have helped people access millions of dollars towards care through using this unique vehicle, taking a life insurance policy, which people, by the way, are seeing TV commercials all the time about if you don't want a life insurance policy, you could be sitting on a gold mine. Well, it's true. There's value there. Don't ever throw away a life insurance policy because that's something that might be the key to helping you with your retirement and your health and long-term care needs as those expenses are getting tougher and tougher to meet.
Okay, so let's talk some basics. So I have a life, let's just say, I have a life insurance policy, let's say for $200,000. Is that an average amount for people in the United States?
Yeah, the minimum policy that would qualify would be 100,000. So the average is, yeah, up around there. Sure.
So let's say we have a $200,000 policy, but
Okay.
I really don't want to, I want to keep it because it's my husband's policy. If anything happens to him, that money is going to help me live,
Right.
right?
Right.
So isn't that a philosophy of many people, correct?
Well, and it's the right philosophy. The best use for a life insurance policy is to keep it in force by paying those premiums until the death benefit is paid out to the beneficiaries. Now, the question becomes, are
Yes.
the beneficiaries still there? Do the beneficiaries still need that money? Or, if you bought that policy to protect your family when you had young children, but now 25 years later, the kids have moved on, they have jobs, they own homes, they have their own life insurance protecting their own kids. Now the question becomes, do we still need this policy? Can we still afford to pay the premiums on this policy? And would we be better off to liquidate the policy and get as much as we can for it today while we're still alive and use that money towards what we need today? Or are we better off to keep it until it would pay out the death benefit to somebody who that would be the best use for the policy? We always look at that first. But if that need isn't there, if you can't afford it and you're thinking you're going to get rid of it, well, then let's take a look at, could you qualify for a life settlement, which is a no cost uh, um, process to determine would you qualify, and if so, get paid out, who knows, 10%, 20%, 30%, 40, 50% of the death benefit could be paid out to somebody who owns a policy. The older and sicker somebody is, the more they're going to be paid for a life settlement. It's the only financial vehicle out there that does that. It actually rewards the owner of the policy with a higher payout, more value. The older they are and the sicker they are, they're going to get more for a settlement.
All right, so let me ask you a question. So I think, yeah, that might be a good idea. That might be interesting. I'd like to talk to you about that. So what would I do? So now I'm going to have that money. So do I wait to do that until, let's say, God forbid, that my husband is really sick and now I'm desperate and I need something? Would I wait until then, or would I say, well, my husband's healthy now, so should I sell it now and then invest it in an annuity or pay off my house?
Well, the answer is both of those could be possible. Now, if you're too healthy or you're too young, you're not going to qualify for a life settlement.
So
Okay.
you don't want to,
So,
right?
right. So there is a measure of, if you're in your early 60s and perfectly healthy, you're not going to qualify for a life settlement. But let's say you're now up into your 70s or your 80s and you have some health impairments, you may qualify for a settlement. Now, again, the older and sicker you are, the more you're going to get. So let's say you were on the younger, healthier side, but could still qualify for a settlement. You might do that and then take that money and put it into an annuity to set up a lifetime income stream. Or you're older, you're sicker, your care needs are immediate, and you get a substantial chunk of money from the settlement. You turn around and you're able to start spending that on your care needs immediately, and you might not qualify to put that money into an annuity, or you're certainly not going to qualify to put it into a long-term care insurance policy, but you have money now that you can use to pay towards health care, long-term care costs, or anything else you need.
All right. That's great information. So how long does it take if I was in a situation today where I needed some money? Then how long, first of all, who do I call? And second of all, how long does it take to get it?
Well, we've certainly been doing this for over 2 decades, so we would recommend to your listeners that they call us. They go to the Retirement Genius website. Um, our number is 866-602-5000, retirementgenius.com. We're standing by to help anybody. Um, and from start to finish, the entire process will take, call it maybe 60 to 90 days. You'll know pretty quickly if you qualify. Then it's just a question of how much would you be paid, and then going through the paperwork to finish it all up so that you could be paid out. It's kind of like the sale of a home. It's a closing process. You're going to sign some documents. The money you're getting for settlement sitting in an escrow account. When it's done, the money is released from the escrow account, just like when you sell your home. And then that money is yours, free and clear to do with as you please. And depending on your health needs, you've got money to start paying for home care, start paying for assisted living, start paying for whatever it is you need.
And what if somebody can't wait 90 days?
Well, we've certainly worked with care providers to let them know and we work with care providers all over the country to let them know how the process is going. And we've seen care providers, based on the fact that the settlement is progressing and getting done, start to provide care in advance of being paid from the settlement, and then collecting what's back pay due to them after the settlement's complete.
Chris, one thing that I hear people talk about all the time, and we talk about, is we don't know how long that person's going to live. I have a mom who's 105 and a half. We thought years ago, well, we've got this much money and it'll be enough because she can't possibly live that much more longer, but she does.
Yeah.
So what do you do with families? We don't know how to plan. We don't know how much money we need.
Well, we don't. But what you want to do, and that's why the idea, and I find it to be so absurd when I hear some of the more well-known pundits out there saying, if you don't have 2 million, you can't retire in America.
Saturday morning radio shows, yeah.
Yeah. I think we all know who we're talking about, and I say it's not a number; it's a percentage. You want to be in a position to replace 50 to 70% of your income that you had while you were making money. And so now so let's say you were making $100,000 a year, and in retirement, it's a combination of Social Security benefits, Medicare, and then your investments. Can that come together to be the equivalent of, say, $50,000 to $70,000 a year towards your retirement? And can you sustain that? Because remember, when you're on Social Security, that's for the rest of your life. When you're on Medicare, that's for the rest of your life. If you go on to Medicaid, that's for the rest of your life. So you have those safety nets underneath you, and you want to then make up the difference with what have you been able to save, invest, what income. You might tap into your home. You might tap into your life insurance policy. You might have an annuity in place that's also providing a monthly income. And when you bring those things together, you can get through hopefully a long, sustained, fulfilling, and healthy, happy retirement.
That is great information. Chris, we have 1 minute. Well, first of all, thank you for being here. We need to have you back again.
Would love
And
to.
this will be available online for people to watch it and rewatch it. What would you like our listeners and our viewers to know in our last minute together, and how can they reach you and access your books?
Yeah. So remember, and we've made this point, but let me emphasize it. It's never too late, but the sooner you start, the sooner you take control of your life financially, from a health perspective, you understand that long-term care will eventually be in your life and it will be expensive, and that your lifestyle, your purpose, your plan, the sooner you're bringing those things together, the better you can plan for your retirement, the better you can enter your retirement, and you can live through the stages of retirement. The early, happy, fun stages with all the travel, the middle stages where you become a little more homebound, but you're still doing well, and then that final stage where it really becomes a matter of managing declining health. It's all about planning. It's all about communication. It's all about information. And we have a lot of great information that will help you on your journey at our website, retirementgenius.com, on our YouTube channel, the Retirement Genius YouTube channel. Just look for Retirement Genius on YouTube and just give us a call. We're happy to talk to you. We're happy to answer your questions. 866-602-5000. Retirement Genius, here to help you retire like a genius.
And we would all love to do that. Chris Orestis, thank you so much. To our viewers and our listeners, thank you for tuning in today and being with us for another episode of Always Ageless with Valerie V. And until we see you next week, again, stay curious, stay kind, stay bold, and always stay always ageless.